Hi everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings and see what's really going on under the hood. Today we're decoding Radian Group Inc. And let me tell you, it looks like they're doing some financial wheeling and dealing to keep their operations humming. So what exactly is Radian Group Inc. up to? Well, this filing is all about a pretty significant update to one of their financing agreements. Think of it like getting a bigger credit card limit to buy more stuff for the business. At its core, Radian Group Inc. has a subsidiary called Radian Mortgage Capital LLC or RMC. RMC's job is to buy mortgage loans, which are basically loans people take out to buy houses. They hold onto these loans for a bit, either to sell them directly to investors or package them up and sell them in bigger chunks through something called securitization, which is just a fancy way of saying they bundle up those loans into new investment products. To do all this buying of mortgage loans, RMC needs money, and they get it through a financing agreement, specifically an uncommitted master repurchase agreement. This particular agreement is with JP Chase Bank. Now, this agreement has been around for a while, having been assigned from another bank to JP back in July of 2024. RMC uses this facility, meaning this source of funding, to finance their purchases. And it's not just RMC that's involved, Radian Group Inc. itself. The parent company has also stepped in with a guarantee agreement that basically means if RMC can't pay back the money it borrowed from JP Morgan, Radian Group Inc. promises to cover it. Over time, this agreement, the JP Morgan RMI, has been amended. Think of amendments as official changes to the contract. Most recently, before this filing, they increased the maximum amount RMC could borrow up to $400 million. This was a temporary boost good until August 28, 2025. But now, here's the big news in this filing. On August 28, 2025, RMC, Radian Group Inc. and JP Morgan got together and signed Amendment Number 3 to this Master Repurchase Agreement. What does this amendment do? Well, it significantly ups the ante on the financing. They've increased the maximum amount RMC can borrow from JP Morgan from $400 million all the way up to $500 million increase. This shows a clear move to inject more capital into RMC's operations, suggesting they plan to acquire a substantially larger volume of mortgage loans. And it's not just about getting more money, they've also extended the life of the agreement. The termination date, meaning when the agreement would normally expire, has been pushed back to August 27, 2026. This gives RMC more time to utilize this enhanced borrowing capacity, indicating a strategic decision to ensure stable funding for their mortgage acquisition activities over the next year. Crucially, this new amendment also includes something called a reaffirmation of the company's obligations under the parent guarantee. This means Radian Group Inc. is doubling down on its commitment to back RMC's debt to JP Morgan. They're not pulling back their support, they're explicitly confirming it, which is important for JP Morgan in extending this larger credit line. So the big takeaways here are more money and more time. The core terms of the original agreement and the parent company's guarantee are still in place, but with these key increases. This suggests a strategy to fuel growth by acquiring more mortgage assets, and they are securing the necessary financing and commitment from the parent to make that happen. Now, you might be wondering if this counts as a direct financial obligation. And yes, essentially, by increasing the borrowing limit and extending the agreement, it creates or modifies their direct financial obligations. The company's overall financial picture is impacted by having access to more debt, and they've clearly communicated this change in their financial commitments. The actual document detailing this major change, Amendment Number 3, is filed as Exhibit 10. It's the nitty-gritty legal document that lays out all the specifics of this updated financing deal between as the guarantor. So what does this all mean for Radian Group Inc.? First, it signals confidence. By securing a higher borrowing limit and extending the agreement, Radian is signaling to the market and to its lenders that it expects to be very active in acquiring mortgage loans. This is a major expansion of their operational capacity. Second, it's a bet on the mortgage market. This move suggests that Radian believes the demand for mortgage acquisition and the eventual sale or securitization of those loans will remain strong or even increase over the next year. They are positioning themselves to capitalize on potential opportunities in the housing finance sector. Third, it highlights the importance of these financing facilities. For a company like Radian, whose business model relies heavily on acquiring and processing mortgage loans. Having robust and flexible financing is absolutely critical. This agreement with JP Morgan is clearly a cornerstone of their operational strategy. Now let's put on our Warren Buffett hat for a moment. What would the Oracle of Omaha say? He'd probably look at this and ask, is Radian Group Inc. getting a good deal on this financing? Are the underlying mortgage assets they are acquiring valuable, and are they being acquired at a fair price? This amendment itself doesn't give us the unit economics of their actual loan acquisitions, but it does tell us that they are securing the capital to do so on terms they find attractive enough to extend and expand. The $100 million increase means Radian can potentially acquire more loans to sell or securitize. If the market for these loans is good, this could lead to higher revenues. However, it also means more debt. While this debt is directly tied to acquiring assets they plan to sell, any misstep in forecasting market demand or in the pricing of those assets could lead to problems down the line. The extended termination date to August 2026 de-risks their short-term access to capital for acquisitions. It provides a stable runway, which is always a positive sign for ongoing operations. Ultimately, this filing is about securing more firepower for Radian's mortgage acquisition engine. It's a strategic move to expand their footprint in the mortgage market by leveraging debt financing from a major institution like JP Morgan. It shows the company is actively managing its funding to support its core business activities and is willing to take on more capacity to capitalize on market opportunities. The key will be how effectively they deploy this increased capital and whether the mortgage assets they acquire prove to be as profitable as anticipated. Alright, that's our breakdown of Radian Group Inc.'s latest filing. What's your take on these numbers and what they signal for the company's future? Do you think this expansion is a smart move or a risky gamble? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate America. Don't forget to check out our Discord community, linked in the description for more discussions and insights. Thanks for watching, and we'll see you next time on Corporate Decoder.